In conjunction with the subdued US dollar index's activity and recent hawkish remarks by several ECB officials, the EURUSD remains under downward pressure. As a result, traders are apprehensive about initiating significant directional adjustments until the Federal Reserve's (Fed) position on interest rate increases becomes more transparent. The anticipation is high for the forthcoming disclosure of US consumer inflation data the following week, as it may provide insights into the timing and velocity of Fed rate hikes in 2024. This information will significantly impact short-term USD dynamics, which may also stimulate movement in the EURUSD price. Elevated US Treasury bond yields are supported by the hawkish sentiment for the US dollar, limiting the upside potential of EURUSD. The safe haven USD might struggle to gain additional momentum without substantial economic updates from the Eurozone or the United States, given the prevailing risk-on environment. Insufficient purchasing activity indicates that the recent decline from the peak in December may not have reached its conclusion yet. The EURUSD daily price trades bearishly within the descending channel, where the near-term supply zone is at 1.0898 to 1.0833. The MACD histogram lost the downside momentum and reached the neutral level, while the RSI looks potent to sellers as it remains sideways below the 50 line. In this context, a downside continuation is possible if the price trades within the channel. A daily candle below the 1.07 level could extend the downside pressure towards the 1.05 area. On the bullish side, a valid channel breakout could be the primary signal of the bull run targeting the 1.11 resistance level.